Good afternoon, everybody. Welcome back to the channel. Hope everyone is doing well. Happy Sunday. It is time to get down to business as we look forward to the week ahead. We got some interesting stuff going on as far as the economic calendar goes, and definitely some setups that we're watching across the board. So, without further ado, let's go ahead and jump into it. But first, let's start with the economic calendar. This week, it is no doubt all about the jobs data. Starting on Tuesday, we have the JOLTS data followed by consumer confidence. Then we get our ADP, non-farm employment, which is pretty much the preliminary reading to Friday's report when it comes to the non-farm employment and the unemployment rate. We also got some interesting data points sprinkled in, such as the consumer confidence. That's always a pretty interesting one. And then we also have the manufacturing PMI and manufacturing prices. Now, we all know that manufacturing is always a little bit of a weak spot for the U.S. economy. So we'll see if that ticks up a little bit. We did see it improve last month. So we'll see if the manufacturing sector can build upon that and pick up some momentum off of it. And then on Thursday, we get our general weekly unemployment claims, but Friday's definitely the big kicker when it comes to the non-farm employment change, the unemployment rate, of course, and then we also get our average hourly earnings. So yeah, and this just ties into everything with what the Fed is doing because as of the latest readings, the jobs has been a little bit more on the weaker side than what the Fed would like. And the Fed is definitely doing this really interesting balance of its dual mandate. And things are definitely getting tricky for the Fed because inflation continues to be sticky. It's rising in some areas, it's declining in some areas. They're finally saying tariffs are going to most likely be a one-time impact, aka transitory, but they're not really saying that word now, are they? But yeah, for the most part, the Fed is at just a very interesting spot, and they're going to have to balance these things out as best as they possibly can. And yeah, this week it's all about the jobs data. So that's mainly starting on Tuesday. Monday, we do have the pending home sales, but that's not really a market mover at this moment, but something to be aware of. But starting Tuesday is definitely for sure when you want to be paying attention to the economic calendar, no doubt about that. And then, of course, just pay attention to whenever Trump decides to tune in and speak. So without further ado, now that we've got that taken care of, let's move on to the charts here. As you can see, last week it was pullback. The market took a little bit of a breather. The blue dotted line here is the 21 EMA. So we finally had our mean reversion on the daily chart. We came all the way back down to about 654, undercut the 21 EMA just briefly, and then we have bounced back. Now, if we look at the weekly chart, we can see that we are still very extended from the 21 EMA. We haven't had a mean reversion since this entire run-up has occurred. We got ourselves a nice, pretty picture-perfect doji on the weekly, so some indecision here. Bulls and bears can't really win on their respective sides, so we're just kind of stuck here waiting to see. But nonetheless, when you look at the weekly charts, we're still very much so in a bullish uptrend. Even so, when we look at the daily chart, if we look at this, we can still see this is a clear, strong uptrend. The chart is moving from bottom left to top right, higher highs. It's just very strong. And we didn't even get our close below the 21 EMA, suggesting that trend has ultimately changed. but for the most part, if we go to the hourly, we can see it is a little bit more on the messier side. We can see that the 21 EMA started to kind of flatten out. Price has just kind of gone stagnant. So when we look at the smaller time frames on the SPY, we can see that momentum has definitely kind of stalled. Structure has taken a little bit of a pause. So for the most part, that's all this is. As of right now, we're just taking a breather and digesting some of these big moves that the market has had. So, the overall picture is still bullish. There's nothing too crazy red flags out there. Of course, we're going to look around and see if there are any major red flags, of course. But as it sits on the SPY, of course, yeah, still looks good, still looks strong. I would just say continue to move up your stops on longs. Don't go too heavy just because the market is kind of lofty. And like I said, the only thing that's kind of really spooky here is that we're so far extended. We've been extended for quite some time. But other than that, we can continue to move higher and be overbought. Overbought's not really a bad thing. So, yeah, as long as these longer term structures remain positive, I don't see why not. The bulls are still very much so in control. Just on the smaller time frames, there's a little bit of hesitation. Maybe for now, day trades will be your best friend, no doubt about that. Let's move on to the NASDAQ. Same situation here. Pulled back to the 21 EMA. Even so, looks a little bit better than the SPY. Didn't even come back to the 21 EMA like we saw. And, on the SPY, 654 is your key level here. On the Qs, yeah, I want to watch that 583. We could argue, the 587. As long as you don't have a daily close under those levels, we're still looking pretty darn good from a bullish perspective. The Dow made all-time highs. As you can see, we did hit our targets on our Dow longs. Let me go ahead and get rid of that drawing there so we can see everything. Yeah, the Dow came all the way down to the 21 EMA, actually came back and retested near perfect this prior all-time high breakout at 457.87, and then we bounced back up. So the Dow continues to look pretty good. The IWM briefly made fresh all-time highs, but as the IWM likes to do, touched the all-time highs and pulled back. So we'll see if the small caps can continue to hold strength here and push back above 244.46. Definitely want to see another close back above that level. We don't want to see this as a false breakout like what we've seen in the past. Most notably, if you look right here on the IWM, where it finally broke out above 233.53 back in the COVID days, and we had a false breakout, and that's kind of the rest is kind of history from there, of course. So now we'll see if the IWM small caps can continue to push on ahead. But for the most part, when we look at the SPY, the Qs, the Dow, the IWM, structure still looks good. Momentum still looks okay on the longer time frames. Smaller time frames, yeah, we're still looking for that momentum to shift back up to the upside and become realigned with those larger time frames. Other than that, yeah, bulls still doing pretty well. Now let's take a look at the HYG. This is like your junk bonds. So if the junk bonds are doing okay, if they're buying all the junk, that's generally a positive sign here for the overall market. Same situation here. We got the pullback to the daily 21 EMA, and we've bounced off a little bit like that. As long as we're not making lower lows here on the junk bonds, should generally be okay. I mean, the VIX, the volatility index, fear, we keep having these little bit of pops to 17 and we just die down. So volatility, yeah, we're getting these tiny little pops, but it's not really sticking. It's like the bears are trying to pry around, but nothing too crazy. We smacked down on Friday, came back down to the 15 level. Now, if we start to have these daily closes on the VIX above 17, that could definitely be problematic, and then we could start to see something a little bit more there. But for the most part, yeah, volatility is definitely, not doing too much. So we continue to see these little pops and then it dies down. Probably another sign that day trades are still going to be more of your bread and butter for right now, or very small short time frame swings. But other than that, yeah, nothing too crazy is really standing out. When we go look at our sectors, we can see that we've seen a little bit of rotation here. Energy has definitely picked up. We did break above that 90-50 level, pushing towards 92. There's some really interesting charts here. PSX looks pretty good. You had that breakout over 134.50, and now we're just cruising along here. Needs to clear above 141. We can go ahead and mark this on my chart as soon as I find that. There we go. Boom. There we go. We need a daily close over 141 for a push towards 148. I really like that setup as far as energy goes. Maybe a little bit of extended, especially you got that shooter candle. So we'll see what happens later on in the week. BP, British Petroleum. This also looks pretty strong here. Nice little uptrend breaking out above 35.60. Nothing too much to complain about that one. VLO is just crazy strong here. Still same thing, a little bit of a shooter candle. So we'll see how this week progresses, see if energy continues to lock up. Even utilities had a very strong week. We broke over this 86 mark. Yeah, momentum looks really good. Next thing we need to kind of clear that I'm seeing here is about this 87 mark. If we can get a daily close over 87, I don't see why not. Why can't we go back to 87? So I like utilities a lot here. Industrials basing out, still kind of taking its time. Still looking for a breakout over 155 as far as industrials goes. Tech continues to look pretty good. We've seen new all-time highs from Google. Apple is finally joining the moves here, and as you can see, we also had a long position on Apple. Let me clear that out just to kind of get rid of the colors, and we can see that we're pretty much forming up a little bit of a bull flag over 257.76. Could set us up to break into fresh all-time highs at 260. Remember, Apple has been a struggle for what seemed forever. Apple was just so bad to trade, and we quit looking at it for a long time. And finally, once we got out of this box at 216, we played this upside towards 225. That was great. And then finally, we played again before the Apple event. We got stopped out. And then once it set back up, we played it once again. And look at this beautiful push that Apple has had. Now we'll see if this bull flag can continue to gain momentum and strength and push us up to all-time highs. And when we look at other Magnificent Seven names, look at Tesla. Tesla has been on an absolute rip. Elon Musk bought a crap ton of shares recently, and we are over this 420 mark, holding trend, a little bit of extended, of course, but Tesla can do crazy things here. So if Tesla continues to build on this and continue to hold over 420, I think there's a pretty good shot here that we can also retest these highs around the 460s, 470s. So Tesla is definitely on my radar for the week ahead. Let's see, Amazon's been a little bit of the quiet one. I definitely want to be mindful if Amazon starts to break below 217. There definitely could be some issues here. You definitely want to see 211 hold as support. We'll go ahead and put that as a support level. But yeah, 217, we had this pretty hefty dark pool print, $960 million worth. This was back in June, and so far we'll see if that holds. But if not, lose 217, going down to 211, and then of course if you start to lose 211, it can get a little bit nastier from there. So yeah, there's pretty much your Mag 7 that I'm looking at. Meta Meta's kind of stalled out, nothing too spectacular, but it does look a little bit weak here. If you lose 733, I definitely would pay attention to this gap here towards 700. So we'll definitely keep an eye on that. Communications just in general has been really strong overall, but Meta is definitely lagging from that sector. So something to kind of pay attention to. XLP, yeah, nothing too great. I mean, Pepsi's kind of dragging. S-Bucks is not looking too great either. Starbucks is doing pretty rough. They're closing some stores. Even the Starbucks a few miles down the road, they're one of the ones that is getting shut down, which sucks for them. I really hate that, but it is part of the business aspect of it and all that. Starbucks does not look too healthy at this point. Pepsi, yeah, nothing too great here. If you start to lose 139, yeah, 139.90, yeah, you could set up for some lower prices. So definitely something to keep an eye on for sure. Moving on to real estate, and yeah, nothing too good there. And then let's see, builders. Yeah, the XLB here couldn't quite handle the heat at 93, and we've rejected. So definitely seeing some of that rotation out of the builders and all that back into some of these energy and utilities. Tech still remains pretty good though. Semiconductors are still doing really well. TSM looks fantastic. We've even seen Intel Core having an amazing week with investments from NVIDIA. They also have the backing of the government at this point. So there's actually a lot of good happening with Intel right now, which is crazy because if we look at a very long, look at this weekly breakout. I mean, this weekly breakout is absolutely gorgeous. If we zoom out, if you're let's say if you're a long-term investor, you're pretty much been hanging out at the same price as it was back in the 90s and early 2000s. So yeah, you're kind of disappointed, especially if you had Intel based on the dividend and they got rid of the dividend. We'll see if they bring that dividend back. I'm really curious about that. You do have earnings coming out later on in October. So I'm definitely going to be keeping my eyes open for that. But yeah, Intel, you had this incredible weekly breakout. So we'll see if that continues. You can see here we have this nice little Darvas box. So we'll see if this can continue. Yeah, look at that. Right to the 618. Your next target is going to be 40 based on the width of the Darvas box. So you already hit the 618. That's great. 40 is definitely going to be the next target here longer term. So Intel looks fantastic. A lot of these semiconductors look pretty darn good. AMD, I'm waiting to see if we get a breakout above 164.75. We'll just round up. We'll look for a break above 165 to push towards let's see, probably about this 170. Yeah, 170, 175 looks pretty interesting to me. So AMD is looking a little bit spunky. Broadcom has been pretty strong here, holding 330. But as you can see, I mean, there's not a lack of good setups when we really break things down. I mean, financials still look good here. JP Morgan has been on a tear. Goldman looks really good. Also, Raymond James broke out into new all-time highs. That also looks good. PNC looks pretty good if it can get breakout above 206.50. But like I said, there's not a lack of strong setups. They're definitely there. You just have to look for them and be patient with the setups. And overall, just keep a close eye on this broader market. See how the S&Ps are doing. See how the NASDAQ is doing. And of course, pay attention to the VIX. But for the most part, there's still a lot of good setups out there. The market is still overall bullish. You just may need to be patient until those smaller time frames, such as the 1 hour, even the 4 hour, wait for those to realign themselves with that daily picture and the weekly picture. So overall bullish, just smaller time frames remain a little bit weak for now, but we've seen we've looked at plenty of charts here, and we can see that there's a lot of good setups. So don't be too, overly worried as it sits right now. Of course, that can change within tomorrow or, Wednesday. You never know with all these jobs data coming up. Just be mindful of where things are at, where you are at personally, and play the charts as they are. So tune out the noise, focus on the charts. Price doesn't lie. And yeah, leave it at that. All right. Have a great trading week. We'll see you next time. Have a wonderful week. Be sure to tell someone you love them and have a wonderful, wonderful day. All right, guys. Take care. Bye-bye.